Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. Well, the theme song will take you where you want to go. The market didn't really go anywhere today. It's pretty much flatlined. Let's have a look at where the CBO 200 is. Unchanged from the start of the day, and similarly on the ASX 200, although it does look like potentially the laggards are going to just beat the winners today. The ASX down 6 points, 0.1%, as we see big weakness coming through from tech, from real estate, from energy, from miners, offsetting the good gains that we saw coming through from the banks. So let's get to the themes of the day. And there was a little bit of buoyancy coming through from the banks, which got hit hard last week. Don't know whether people are buying in for the CBA dividend, but it's had a very good session, up by about 2.5%. ANZ also looking good, and NAB a front runner as well, up by 2.5%. But it's always a battle between the banks and the miners, and it looks like the mining and energy sector may have just dragged us marginally lower. And of course, what else is dragging us lower is WiseTech. So its share price down by some 21%. A big exodus of board members this morning before the market opened. We heard that. We knew that WiseTech had been placed in a trading halt on Thursday. It resumed trade today. A lot of allegations and concerns about the founding CEO, Richard White's personal behaviour, and a lot of weakness coming through from investors in that stock today. Henry Jennings from Marcus Today has written a really good piece on this in our afternoon newsletter, which comes out at 5:15 p.m. Eastern, so watch out for that one. And of course, final stretch, the last week of reporting season, at least the last official week that companies have to deliver their results to the ASX. A mere 170 companies coming through with their earnings today. It felt like most of them were today in itself, but of course we've got a few more to go as we round out the rest of the week, 4 more days of official reporting season. Let's have a look at the sectors. We mentioned the banks did quite well today. CBA shares up by 2.2%, NAB up by 2.5%. Westpac, the underperformer there, with 3 of the big 4 up more than 2%. The tech players, though, led lower by WiseTech, down 20%, $97.12. Xero NextDC, which came through with its earnings today, and Zip also coming under pressure. And when it comes to the materials space today, we did see some weakness coming through from the miners as well, with BHP down 1%, Rio off by almost 3%. Of course, a very busy day on the reporting calendar, and we were also following the news of WiseTech. It expects its revenue to be at the bottom end of its guidance. Also, of course, the news of the 4 non-executive directors stepping aside. NIB was a very good front runner today. It did cut its dividend, but shares rose by 12% on its overall result. Ampol cut its full-year dividend to 65 cents, sending shares down by around 3%. Lovisa, the jewellery maker, its result softer than consensus. Comparable store sales declining towards the end of the first half, shares off 3.5%. And also in the retail space, Kogan.com declaring an interim dividend of 7 cents per share and intends to resume a share buyback program, but not enough to excite investors. Aussie Broadband, meanwhile, tricking higher. It lifted its full-year guidance. Iris, we use that every day, slumping on lower than expected profit. And Reece warning soft trading conditions in the US and Australia set to continue. And it's actually set for its worst day ever amid its first half result. Let's get more on reporting season and market action, and welcome to the COB, Josh Gilbert from eToro. Good to see you, Josh. We are in the final stretch of reporting season. How's your take on it been so far?
Yeah, hey Juliette, great to see you. Look, I think it's been pretty mixed, to be honest. Obviously, I think probably those sort of bigger names that we sort of look towards to try and buoy the index a little bit. You think about CBA, think about BHP, think about Rio. You're not sort of really coming out with anything sort of too special. I mean, look, Rio and sort of BHP to be expected, I guess, really, with the sort of some of the weakness that we've seen from iron ore prices and what we've seen from China. And then obviously the cutting of those dividends was, likely to sort of happen. In some sense, maybe a good thing, looking towards that sort of growth for the future. On the other side, CBA, that sort of had kind of priced into perfection, basically. So I think there was always going to be, unless they delivered something, pretty astonishing, it was always going to sort of see a bit of weakness. So I think so far, I'd say it's pretty mixed. We've had some big winners and some pretty bad losers at the same time. But, it's a very, very big week this week. So still a lot to sort of come from it. But yeah, all in all, I'd say it's been a pretty mixed set of results that we've had so far.
So what is on your radar? I note Qantas launched a big sale today, but what can we expect in from some other earnings?
Yeah, well, look, obviously Qantas is probably one of the names that we look towards. Really, ultimately, it's sort of spent a lot of money, right? CapEx has sort of grown pretty significantly within the last year. A lot of that is sort of really trying to drive this sort of consumer perception, this big sort of brand revival. But it is actually working. They've some sort of YouGov surveys that have come out have said that they're one of the biggest brand movers on the list for January. So sort of really gaining that public perception has been pretty important. That's obviously coming, the net effect of its bottom line. Obviously, outside of that as well, spending more money on planes and those types of things. But again, still struggling a little bit with actually, earning consumers' trust around sort of points and that sort of side of the market. So still a lot to do, I think, for Qantas, but ultimately investors have been pretty positive. Shares are up 60% in the last year, so it's had a great time. But I think the big thing on Qantas this week, I'll be keeping an eye to see if that dividend is going to come back, and having a look at sort of the dividend forecast on Bloomberg. They expect to see it sort of come back this first half year, so it'll be interesting to see if that comes back. Outside of that, we've got a few other names. I think probably Coles and Woolies will probably be two other names that are looked at pretty closely by investors. Obviously, both have sort of been under the radar of the ACCC as well. Cost of living, grocery prices, that type of thing, price gouging. But what we do know, and maybe isn't as sort of front and center to consumers, is that both these names sort of trade on wafer thin margins, right? So it'd be really interesting to see how they've been affected, if they continue to be affected by this price gouging, if they're sort of really giving into that. Are margins being affected? Are they sort of still staying pretty low? That will be really important. Coles has had a bit more of a promising start to the year. Woolworths has just continued to sort of struggle. Both names I think we're going to be looking at from an e-commerce perspective. That's going to be key to sort of ongoing growth. And both are doing really, really well there. For Woolworths, it needs a better report than what Coles does, really. Really struggling. Obviously, it had those strikes towards the sort of back end of last year as well. So I think that's going to be sort of really important. So I think that's something that we're going to be looking at there. More positively, though, from both those names, we've obviously had that RBA rate cut coming through. We're still seeing population growth coming pretty strongly. So if we do see a bit more positivity coming through from the RBA, maybe do get a couple more cuts, could be a little bit of a better time for both those names moving forward. But short term, I still think they're going to come under a little bit of pressure.
Yeah, you make an interesting point. I was talking last week to Wesfarmers after their result, also Guzman and Gomez, Inghams, all of that playing through into the consumer. They all said, though, which I guess is going to be reflected by Coles and Woolies too, we have to eat, so there is still going to be some kind of spending. But with that in mind, and with the rate cut that we have got, how much does that sort of potentially boost sentiment and help the outlook for some of these big consumer staple players?
Yeah, look, I think it's really important, and that's such a good point, right? At the end of the day, that's why they are known as those sort of staples, because we will always turn to them. We have to go to Coles, we have to go to Woolies. We've got to use it, and like most things here in Australia, it is that sort of monopoly almost. Yes, they have a bit of competition from IGA and Aldi, your Metcash, etc. But really, those are the two names that we sort of mainly turn to for our sort of shopping goods. So I think that sort of rate cut coming through is sort of going to be really positive. We're seeing inflation sort of come down. So on both sides of that, that's really positive for those names. Food inflation should be a bit more positive. That should be able to feed through. And if they can improve from a consumer perspective as well, that should be really heavily important. But I think the biggest thing here for me, I think it's just coming down to sort of population growth. We continue to see people coming into Australia. If that growth is continuing, then we're going to see more people shopping at these supermarkets, and that's really important as well. So if people are finding that they've got a little bit more money in their back pocket, it could be extra treats in the supermarket moving forward. So both those things I think are going to be really positive for both those names moving forward.
All right, I love a treat. Thank you, Josh. Have a great day. Josh Gilbert there from eToro. Let's get back to stock specifics. And we mentioned that WiseTech was a big mover today. It was the stock of the day as well. Nadine was joined by Gaurav Sodhi from Intelligent Investor and Mathan Somasundaram from Deep Data Analytics.
You know, yesterday everyone was probably saying, if it gets below $100, I'm probably going to buy it. Well, it's this is the problem with having these sort of arbitrary targets, because the price changes on news, and news changes prospects. So you can't really have a price in isolation of what's happening at the time. One of the largest red flags for me is fighting between the board and the CEO. I think that's really damaging.
It's good quality, it's got the scale, it's a dominant player. It does, I mean, look, it's done multiple downgrades. Today was a downgrade. Management issue aside, it is a downgrade. And one of those things that we go by, if you're in an upgrade cycle, you see a downgrade, thanks for coming. Right? And you leave. And that saved me a lot of times, despite some of the growth stocks where I've been smashed by a lot of people on Twitter. You realize that strategy holds. And I think Gaurav's right. It's too hard at this point. You're not buying something that's turnaround potential where you got a lot of upside. You're buying in operations where you don't need to drive a scale up. What you're trying to buy is someone to execute.
All right, the market has closed the first day of the week. Let's have a look at the leaders on somewhat of a flat day. NIB Holdings, we mentioned their earnings, doing very well today, up 12% to $6.66. That's a bit ominous. APA Group up 8%, $7.15. Star Entertainment, Ingham's, EVT, all looking good as well. To the downside, though, really led by WiseTech, which we've touched on, down by 20%, $97.12. Iris Reese as well after their earnings, and Block, which of course missed on Wall Street, down 13%. Polynovo off by 9%. In the small end of town today, we had some good gains from the likes of GDI Property, up more than 10%. Peter Warren did well as well, along with Demerix. To the downside, though, in the small end of town, we saw weakness today coming through from Polymetals Resources, which was down almost 12%, and Alcidion, which was weaker by 7.6%. Tonight we get CPI from Europe, and in the US we get the Dallas Fed Manufacturing Activity Index. And looking ahead tomorrow, we've got the RBA's Brad Jones speaking, and also a pretty big day. I mean, isn't every day, but some big earnings numbers coming through from the likes of Woodside. Also Domino's Pizza, talking about the consumer picture, and Zip as well, as we look at the fallout effect from WiseTech on the overall tech industry. Let's have a look at where the market has finished the day's trade. Virtually unchanged from where we saw it on Friday. Looked like we had a bit of a wobble on the start, and then things were looking okay, but we have managed to basically flatline on the close. The ASX 200 down 5 points, so unchanged, 8,291. Again, the battle here between the energy and mining players and the banks, which held up, and then WiseTech and the likes of that weakness in the tech space, just meaning that the laggards really won the battle today. All right, we do it again, all again tomorrow, I should say, from 9:45 a.m. Eastern. We'll see you then.